Welcome to the Money Market Show. I'm your host, Paul LaJoy. Every week and almost every day, we feature exciting interviews by some of the most exciting people in the mortgage industry. Today with me is Max Napolitano, and he is from Redstone. Man, I can't wait to talk to him. Welcome to my show, Matt. Max?
Hello, Paul. How you doing? And good afternoon, everyone. I'm Max Napolitano. I'm an account executive for Redstone Funding, and we are the fastest growing jumbo and non-QM lender in the country. And part of this is because of our great fintech technology and our great product mix and our great pricing and our great #1 customer service, bringing people back.
So let's talk about your loan programs, Max. Okay, you were telling me before the show that one of the things that you guys really stand out. You mentioned fintech. It's
right.
The bank statement loans, and how do you analyze someone's income using bank statements?
It's amazing. It's almost like an algorithmic calculator. The mortgage broker, or you yourself, Paul, or another mortgage broker will fill out the information for their client, their name and their email. The client will then receive an email, and they will log into their account just as if they would do on their mobile phone app or on their computer. So it's very safe, very private. It's just as if we just get a snapshot as a lender into their finances. And they basically link up their accounts, whether it's Wells Fargo, Chase, Bank of America. They link it up, and within 10 minutes, we generate a report that provides us the average monthly income and their average assets.
Well, that's interesting. That's interesting because a lot of other lenders, they tell you to send them your mortgage, your bank statements, right? For 12 months, whatever, and stuff like that. And then they send it off to somebody else. But you're telling me your tool will link, right? The clients, the borrower's bank account.
Statements. Yeah, their assets. Yeah.
Yeah, the bank account onto your system. So it pulls the bank statements right from their bank account.
Yeah.
And it analyzes.
You can do a 12-month average, or you can do a 24-month average. And it's generated within 10 minutes. And we use that report instead of having to upload all those bank statements. No more hassle, no more tons of paperwork getting together. No manual underwriting. It's all
all first class. It's first class. Yeah. That's a game changer. That's a game changer. That's a game changer.
Yeah, it's a definite game changer.
Oh my goodness, I'm very excited myself because I've noticed, I'm relatively new in the mortgage industry, but I'm very excited about it because I've been in the real estate industry for a long time, since 2005. And I just started this stuff, and I cannot wait to partner with people like you. I'm a tech guy myself, right? And I have a vision to build this company to the next level. So to have somebody like you and your company, with all the support and the tools, man, that's just a game changer. So somebody, you don't have to wait for somebody else, right? You can just say, okay, here's a link. I send it to the borrower.
Right.
And they link that stuff, like you said, even their app.
Borrower doesn't have to bother with getting all their statements together, sending it to you. And I mean, it's just so much easier. And it's actually so much safer for them as well. Yes. It's safer than email. It's safer than uploading documents. This report is top-notch security for the client.
Wow, that's great. So now talk about that.
It's all encrypted. It's all encrypted. Very safe site to use. Yeah.
So now you have, within 10 minutes, they got the analysis. Say, here's your income, right?
Right.
And now, what do they use that for? For private residences or for investment properties?
For the loan file, whatever loan program. Well, that particular loan program is the bank statement loan program, which for our company is called the Vice program. But yeah, now that's what the underwriter uses. They still evaluate because it still shows all the transactions, the report, deposits, withdrawals. They might make some adjustments to the income. If there's some large deposits, something that's inconsistent, maybe they might back that out. But more or less, you get a good idea of whether or not you're going to get approval on a loan right at the beginning. No surprises.
That's interesting.
Doesn't waste your time, doesn't waste the client's time. You know what I mean?
Yeah, because it eliminates human error.
Right.
Right? It eliminates that human error. Because some of the lenders say, you know what? We can't take this because it's pension. We can't take this because it's coming in. Okay, like we have one client that we brought to you, like Prosper brought to you, and you guys were able to approve that person so quickly. Okay.
Oh, yeah.
Whereas everybody else said, no, your income is this. We're going to discount this. That's not income. That's not income.
Or it may take a week for them to evaluate it.
Right.
Right.
Wow, that's great. I can't wait to bring you we need to have a plan here, man. Or I could bring you like maybe 10 loans a month.
That would be great. That would be great. Definitely.
Now let's talk about the details of your bank statement program. So we talked about the technology, which is great. Let's talk about the details of a bank statement program. So what's your LTV? What's your loan to value? And what's the credit?
Go to 90%
90%?
maximum. I just closed today, actually, as a matter of fact, on a property in Castle Rock, Colorado. 90% loan to value. They got a rate of 4.625.
Okay.
We did 24-month bank statement loan, and we closed it. We closed it in just a little over a few weeks, like 3 weeks.
Wow. Okay.
Appraisal. Yeah, we got the appraisal pretty quickly, and they got a good rate. And we use the automated bank statement program report. Same thing. Yeah.
What kind of FICO scores are you looking at here?
That person had a very high, the 780, but we'll go typically minimum 660. Depending on the loan to value, and if they have good reserves, we might do a small FICO exception. But if they don't get approved on that particular program, we do have another one that's for borrowers that have maybe imperfect credit. That one goes as low as 580.
Wow, 580.
580, yeah.
What's
now, if you're
LTV?
580, then obviously the loan
LTV?
value, the LTV is going to be lower. You're going to be down 70, But again, we can still get you approved. And that could be 1 year out of bankruptcy, short sale, foreclosure.
Okay.
You could have credit at just 12 months out and have a 580, and we still have a program for you. It's called the Flex program.
Okay.
Same thing for a full doc borrower with W-2s. Same thing, 580 minimum. And the LTV is just more restricted. Yeah.
Right. Okay. So 1 year out of bankruptcy. How about foreclosures?
Same thing. Any major credit event, 12 months.
Okay. Major credit event, 12 months. Interesting. Okay. And what about your turn times?
Turn times are DSCR. If we get the main thing that's holding files up is the appraisal.
Yes. Okay.
So like on the DSCR program where it's just qualified on the rents on the 1007.
Yes.
We close that one in a couple of weeks. That's our best case scenario. Generally speaking, as you know, with most loans, 30 days.
Okay, so why are you able to close the rental income program, okay, which we say DSCR, okay, but for the layperson, it's like, okay, rental income program. So why are you able to close that one sooner than the bank statement?
Because we're not verifying any income. It's just strictly off the cash flow.
Yes.
The DSCR calculation, debt service coverage ratio.
Yes.
You're dividing your gross rents by the liabilities or the expenses.
Right.
And the number. Now, if the number is below 1 or below 0.75,
yes,
then you have to go with a different pricing called the no ratio pricing. You still can get approved. It's just a higher rate.
Okay, what about appraisals? I mean, do you do appraisals on those ones or not?
Yes. That's the most important thing. So on that one, obviously, the appraisal is the key.
Right.
The key factor. Right.
But that's what I'm asking. Why are you able to close that within 2 weeks if appraisal is still a factor?
Well, we pay more. We pad the appraisal cost. So say a typical appraisal maybe 700. We add another 250.
Right.
For the AMCs that we use, we give them extra. Okay. An extra bit of money so that they can expedite the appraisal for us.
Okay. So why are you not able to do that on the bank statements?
Oh, we can do that too. We can do that.
Okay, cool. All right.
Yeah, so any appraisal company we work with, AMC, we pay them $200 to $250 more than the other companies just to get them.
So you're saying that for bank statements as well as the DSCR, you can close this thing within 2 weeks.
Yeah, we have an appraisal support desk that their job is to try to get it ordered as quickly as possible. Okay. But at the same time, when we start the process, when you do those initial disclosures, we need some buy-in, some commitment from the borrower also, because sometimes they don't want to fill out the credit card authorization,
right?
The appraisal. So, they want to get it underwritten, approved, but they don't want to pay for the appraisal. That slows things up. We have an underwritten approval, but we don't have an appraisal, so that holds us back. But if they're committed from the beginning and they order the appraisal, we can close pretty darn quickly. Yeah.
Let's go back to the bank statements. Okay, so bank statements, what is your maximum loan amount?
Maximum loan amount? We go maximum LTV on that is 90% loan to value.
Yes.
Compensating factors. Our guidelines are about $3 million on something like that. Again, really good reserves, compensating factors. We may go higher than that. On the lower LTVs, we're doing loans $5-6 million on that. And we even have one in the pipeline. It's in Malibu. It's over 10 million.
Oh, wow. Okay.
So, but the LTV, as you know, the higher the loan, the more restrictive on the LTV. So it might be 70-75%. Yeah. So it depends. The underwriter has to evaluate everything.
Okay, so would you say that the bank statement loan is your most popular product or the DSCR?
I would say it's about equal on those, on the Vice and the DSCR right now. Those are our
Okay,
two
let's
most.
talk about your DSCR. So what is it? What is it exactly?
Well, it's for investment properties. It's really for real estate investors, and it's just a way for real estate investors to leverage some of their equity, pull some cash out, maybe buy some more real estate properties. And the reason why it's so popular is that it's all you do is you're putting down your employment. The income's not verified. We get the appraisal. We qualify it off the appraisal, the market schedule. Even the property can be vacant. So they could be buying a rental property that's vacant, and we use the rent schedule off the 1007 on the appraisal to qualify to approve the loan. So the flexibility of that program is what makes it so popular, and the quick turn time is what makes it so popular.
So let's say I am an investor. I own some rental properties. Okay, yes. I want to buy another property, right?
Right.
And this is a case I have right now. This guy has a portfolio of properties. Okay, like 7 properties. Okay.
Right.
One of them is 12 units, which you don't do. You do 12 units?
No, we're working on a program called the Multi that's coming out. I don't know the date, but that will go up to 8 units, and we'll be doing mixed use, combination of commercial. So it says someone has a nail salon, and maybe 2 apartment buildings, apartments. Right. Doing that as well. Right now, we go up to 4 units, residential. But in terms of a real estate investor, we can do up to 6 loans or more for one borrower.
One borrower. Okay, so you can do a portfolio. Would you do it as one loan, or would you do it as separate loans?
Individual loans, separate loans. We don't do like blanket loans.
Right. Okay, cool. All right, you don't do blanket loans. So now let's say I have this guy, okay, or a realtor listening to the show right now or watching the show has an investor who has 6 properties.
Right.
And this 6 properties, the LTV is 50%. Right? And this investor now can take that money, okay, maybe cash out refi and go buy another property. Is that something that you guys would do?
Oh yeah, we do that all the time. We typically on a lot of, like, if it's 2 units, we'll only go to 75% LTV. I have got on cash outs, but I have got an exception. Compensating factors 80% cash out, but generally on the cash out, it's maxed out about 80% on single family, 2 unit, 75% cash out. Yeah.
Okay, cool. So we talked about bank statement loan program. We talked about DSCR. Okay, what other programs are you guys offer?
Well, we do full doc jumbo. There's generally no exceptions on that. Jumbo prime. Generally on that one, we don't do the loan amount exceptions. We don't go up to 5 or 6 million. That's the price that's as low as 2.25. That's really, the investor doesn't allow any exceptions, but we do jumbo prime for somebody that wants the absolute lowest rate. We generally go up to 3.5 million on that. If they want something on a higher loan amount, full doc, willing to provide full documentation, we do the Guru program. That's the one where we can go up to 10 million with exception, minimum credit score 660, full doc or limited doc. That would be the limited doc version of that is the Vice, the bank statement loan. Then we also have a foreign national program.
Okay.
And that's for those foreign nationals. Even if they have an ITIN number, we can qualify. They have good job stability. We can verify foreign credit or foreign reserves will qualify. So even if they don't have a real social security number, we can qualify off the ITIN number as well. That's our foreign national program.
What's your LTV for foreign nationals?
75%.
75%. Okay. Yeah. Is that for purchases as well as refinances?
But on that one, again, on 75%, but we could get 80% given good compensating factors on the foreign national. And we're doing big loan amount exceptions. We did one for a gentleman from Australia, a $5 million loan. Another one was a Chilean borrower. Again, large loans. And because they have a lot of assets to verify, they have good credit, we can get them approved.
So these are foreign nationals, okay, guys who are maybe probably very successful in their countries, they just want to have American presence. Okay, so basically, I'm sure some of the realtors are listening.
And if they're willing to go full doc on the foreign, we can do a second home for them. Not owner occupied, but qualify as second home as well.
So full doc for a foreign national, what does that entail? What is that?
Tax returns. Sometimes we have to translate the tax returns, W-2s, verification of income. basically.
So in that case, full dock was the LTV, 80% still?
So, well, it's generally 75% still, but just better pricing.
Better pricing. Okay, cool.
Yeah. But again, you could go to 80% with the compensating factors. And then again, on that 4 national, you can do asset utilization. So verify if they have a portfolio or they have a big stock qualify off that as well.
Okay, so, now let's talk about do you have asset depletion loans as well?
Yeah, same thing. That's asset depletion, asset utilization, kind of one and the same. Yeah,
So let's talk about
terminology. Terminology.
What would be your reserve? What would be your? How would you calculate that? And then what would be your LTV for those ones?
You take the lesser of $1 million or 150% of the loan amount, divided minus the down payment and closing costs, and you divide by 84. A typical like a retirement account. Now, if it's a liquid account, we use 100%. On a say somebody that's over 59 and a half, we'll use 70% of the portfolio. If you're under 59 and a half, then we have to scale it back 60% and divide by 3. Yeah, so it depends on the type of retirement accounts. If it's totally liquid and fully accessible, we can do 100%. Otherwise, if it's like an IRA, 70%. If you're under particular age, 59 and a half, because of the extra tax,
right?
On someone then we have to take 60%. Yeah.
Okay, so let's say,
a completely liquid account be 100%. Yeah.
Okay, let's say they had an IRA, okay, and or they have liquid. Let's talk about liquid. Okay, they have money in the bank, $1 million. Okay, and so how would you do that? How would you calculate your income?
Yeah, generally for the purposes of the loan, $1 million or like I said, over 150% of the loan amount that they're qualifying for. You minus out the down payment that they're putting down, minus the closing costs that we divide by 84 to get our calculation.
I see. That's how you get your income.
Yeah.
Divide by 84. Is that 8? Okay, I see. So some people do it at 36. Is that why you use 84? Is that like the reserves that
for our guidelines, that's what we use. Some of the other calculations, depending on the account, we divide by 360. It really depends on the type of account and the accessibility of the accounts. Yeah.
Good. So we're talking about all kinds of stuff, right? We talked about. Do you guys do a FHA too, or that's not?
Pretty much in this department for my division, we do mainly jumbo prime,
right?
So the larger super jumbo, full doc and limited doc, and non-QM.
Okay, let's talk about the jumbo prime. So I've seen some people have interest rates below 3%.
Oh yeah,
90% LTV.
Right. Huh? Yes, yeah. We have programs as low as 2.25 of jumbo prime. It goes as low as 2.25.
Right. I think that came from you guys because I saw that.
That's our Lux. That's called our Lux program.
Your Lux program. And what is the LTV? What's the loan to value there? I mean, interest rate 2.25. Come on.
Yeah. Yeah. Basically, I don't have my rate sheet in front of me. Do you want to take one? Let me grab it for 1 second. I'll come right back. Or
yes, sure. You can do that. I will just pause.
1 second. So on the jumbo, so our best price jumbo prime is called the Lux, like luxury, and that one again is very strict on exceptions versus like the Vice, the bank statement loan, or the Guru. But for $3 million, we'll go to 80% loan to value. Okay. Minimum credit score 680. Can't have any. It has to be 84 months out from bankruptcy, foreclosure, any credit events. And again, pricing as low as 2.25, but that would be a buy down, so the person would have to pay a lot of points. But at par, pricing, you're looking low 3s.
Okay.
On it, but you can buy it down as low as 2.25 on that program.
Okay, well, how do you buy your loan down? Is it like some people have
a discount combination of discount points,
right?
And obviously what the broker's charging in origination. Yeah, and then you have different adjustments, as you know, on the rate sheet, depending on the credit score, type of loan rate and term versus cash out, that affect the pricing. But again, on a jumbo prime, we go to 80% cash out as well.
Okay, 80% cash out. That's good, right? Not 75.
Right. Okay, cool. And we're one of the few non-QM that goes 85% on non-owner. So we can go 85% limited doc, non-owner.
85% cash out?
No, like if it's a purchase.
Right. Okay.
Cash out, no. But if you were doing a purchase, like 15% down,
Right.
we can do that's non-owner. That's per our guidelines.
Mm-hmm.
And if you have compensating factors, we may even consider 10% down non-owner.
Mm-hmm.
That would be on a loan program though, not the DSCR one where you're verifying bank statements or assets. That one is different than the DSCR. The DSCR is 20% down.
Right. DSCR 20% down. A loan stream, another lender, they got 85% with bank statements, right?
Right.
Okay, cool.
We can, so that's our guideline too, 85%. Again, strong borrower though, with compensating factors, we may consider 9%. Yeah.
Really? For non-owner?
Possibly. I mean, I would say the reason why we're growing faster than a lot of other non-QM lenders is we're willing to look at exceptions.
Right.
And depending on the credit profile of the borrower, we'll always take a look at it. Now, like I said, between 60 and 70% of our files right now that get submitted have exceptions, and most get approved. Yeah.
So last thing I want to ask you, okay, so do you portfolio your own loans or do you sell them secondary market?
We actually don't portfolio any. We are selling our loans right now.
Mm-hmm.
So, we're a growing fintech company right now. We don't want to portfolio anything. We sell everything to an investor. But we're backed by a $1 billion fund, and they give us a lot of room for exceptions.
Right. Wow, that's great. That's great. Is there anything else you'd like to add today, Max?
No, I just hope people consider Redstone. We're one of the fastest, or the fastest, in my opinion, growing non-QM lender in the country, jumbo and non-QM lender. And please keep Redstone in mind for your next loan that you'd like to submit.
Sure.
Thank you for your time today.
Thank you. Thanks so much, Max. I appreciate your time today. It was valuable, and I learned a lot.
Yeah, nice chatting with you.
All right, man. Thank you.
Enjoy your day.
You
Take
too.
care.
Thank you.
Bye-bye.